Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's figure out what happened and what we can expect moving forward. As usual, if you enjoy the video, don't forget to hit that like button. It does help a lot. And of course, this is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live, $3 a month, where you get my intraday thoughts on Tesla, essentially as it's moving throughout the day and all that stuff. If you're interested, the link is down below. Quick and easy to join. But let's jump right into it. Tesla closing the day down about 1.8% on the day, which is going to be putting us at about $252 per share. Now, there is going to be a few things to talk about here, but overall, as I'm sure the most important thing to understand is the fact that on the daily, you can see, if I just bring back these indicators really quickly, we are pretty much once again, we're still really sandwiched in between the 50-day moving average and the 21 exponential moving average. We're just literally ping-ponging in between them. Ever since this massive move up on this massive green day we had over here, which was a beautiful run up, we got smacked back down by the 50-day moving average. Barely had a closure above it right here, but it wasn't super convincing, which I said that day as well. And essentially ever since, we're literally just ping-ponging, especially the last 3 days, really. We've just been ping-ponging back and forth, up, down between these two major areas right now. And that's, in my opinion, probably the most important, or one of the most important things that you want to be paying attention to right now, and really waiting for a confirmation of a break beyond one of these, right? Whether it's below, whether it's above, you really want to wait for confirmation, but you want to wait for something that's ideal. For instance, right, this, in theory, this candle right here, you could have easily taken as confirmation that we finally broke above it and it's time to rally, right? And, it looked like that at first, but as you can see, pretty much what you want to do is when you see these, you want to wait for the next day confirmation of a retest and successfully retest without it just breaking back under. And off of that is usually, again, just my opinion, of course, when you enter the trade to the bullish side in this specific example, right? Because obviously you can have false, breakouts essentially like this, where you essentially get a large red candle like this the following day. So you have to be careful, right? It's not always as easy as like, oh, it crossed this line, time to buy, time to get rich. It's never that easy. It's rarely that simple. There's a lot of extra steps required, but this is the most kind of basic way to look at it, right? So in other words, like I said, you want to wait for an actual breakthrough above one of these and really see some confirmation beyond that, right? Very, very important. Now, the question, of course, is going to lie to, okay, well, which one do we think it'll break, right? Is it going to go up or is it going to go down, right? Which is the more likely outcome? And that's what we're going to be trying to figure out. And there's a lot of mixed signals. For instance, if we go to options flow, which I just shared with my members, right? Throughout the day, it has been slightly getting more bullish, but overall, ultimately, it is still more bearish than bullish, right? It has been getting, I looked at it this morning that I shared with my members, and it was a lot more red than this, but, there's a lot less green as well. But now we're starting to see a little bit of green start to fluctuate in, right? Some bulls are starting to finally step in on such a red day. I did actually step in as well. I did buy some shares today. Not too many, right? On my second account, I did sell them yesterday and I did rebuy them today. Honestly, almost at the same price that I sold them, just slightly lower. But hey, you know what? Lower is still lower. Now, nonetheless, option flow is starting to flip a little bit bullish, but again, ultimately it's still bearish. And it looks like there's still a lot of indecision, right? I've been checking a lot of indicators as well. For instance, if we go over to the daily, which we're actually on right now, the TCW squeeze, you can see here, right? Trying to figure out if this is giving us any indicator as well. It's not showing any squeeze, which I'm a little bit surprised about, but nonetheless, right, it is starting to have the blue bars towards the top side, which is a good sign for the bulls. It's telling us that there's a higher chance that we will break up to the upside from this kind of congestion period that we've been in between these two indicators, more likely up than down, right? Which is good to see for the bulls, obviously not as great to see for the bears, right? That's essentially what that is showing to me as well. On top of that, we have, of course, don't forget, very important, not much to say right now, but the volume profile, you can see we are getting massively rejected on top of course, the 50-day moving average in this large volume area. You can see this volume area is much larger than pretty much anything in its vicinity, right? It's just a massive stick out, right? Compared to pretty much anything right below it and anything right above it, right? A large volume. And as usual, you treat these as a resistance and as a support, essentially, which in this case, since we're going up into it from underneath it, right? We're going from down to up, right? So we're looking up at it. Hopefully that makes sense. But because we're going towards it from the south to up, that is going to act as a resistance. And that is, of course, going to pretty much give us a bit of a, congestion area, is going to give us a bit of turbulence, a bit of, cloudy area above us. So something you want to definitely watch out for. And it has so far been giving us a bit of issues. Let's just say that, right? Definitely a little bit of issues. But on the flip side, actually going back to it, if we fall too far below the 240s and 245 and especially 240, which is a crucial level to defend, because that's almost where the 21 EMA is, but also just a very crucial level, which we couldn't defend over here. And you saw what happened next, right? Mainly because, again, big support area, low volume. So we really want to make sure we're not falling below the 21 EMA and especially the 240. It's extremely important. As long as we're holding that, the bulls have a chance. But on the flip side, as long as the bears are pretty much holding the 50-day moving average, and even honestly as high as about the low to almost the mid 260s, at least, the bears have a chance, right? Because again, even if we do break above the 50-day moving average, there's still going to be a lot of resistance above us, right? We still have a volume profile pretty high up in the mid-ish 260s. But even more importantly, we have, of course, the dreaded 265-ish to 270 area, which gave us a lot of issues over here post earnings sell-off, right? And that, of course, followed up with another massive sell-off. And of course, that is going to be that 618 Fibonacci level I've been talking about every single video. Hopefully, I don't need to revisit it once again. Pretty much go back to any previous videos from today and you'll see me talking about it, right? But crucial level, and I explained many times over the last week essentially why to me that is probably the most important level to determine if this downtrend from earnings is over or we're still very much in it, right? That is crucial information for me, at least. That's the way I like to look at it. But those are the main things I am personally looking at right now and I am paying attention to. So those are the things I'd be very cautious of. Now, if we go over to the 65-minute chart, right, this is where things on the shorter time frame are also a little bit interesting. Let's go ahead and remove these indicators for now. And of course, you can see the yellow lines is essentially that little congestion zone roughly that we are in right now, right? Ever since this massive rally to the top side, we got a short-term top, had a massive sell-off, and now we're kind of zigzagging and getting tighter and tighter and tighter. Now, in theory, not of course, not always of course, but in theory, this should be a bit of a bullish flag, pennant, whatever you want to call them, right? But this should in theory be a bullish pennant, right? Because as usual, you have the situation here where you get a beautiful rally up, consolidate, go zigzag, slowly gets tighter and tighter as you're zigzagging, as you can clearly see right here. And then usually, again, not always, it does break up to the top side. You have a 5-point touch, sometimes 7, usually it's an odd number. So you have 1, 2, 3, 4, and then we come up for the 5th touch point, which will be putting us around $255 per share, which is roughly where the 50-day moving average is. And if we break above that, that should swing us up slightly higher, which I think will help us retest that 270 range, which I still think is very much possible, which is about a 6% move just from the breakout. And if you were to compare it from roughly where we close right now, that will be somewhere around about a 7% move, which is a phenomenal swing trade if you were to swing trade such a move, if you will. So that's the way I'm looking at it right now. The MACD is still looking slightly bearish on the 65-minute chart. You can see red lines still below, the green's below the red. Ultimately still looking a little bit bearish, right, on that sense, but I wouldn't put too much weight into that regardless. Now over to the daily, where things are a little bit more interesting. RSI not looking too bad. Still, I got that potentially slight bearish divergences, but absolutely minimal and nothing I would put too much weight into it. It's kind of nitpicking in all honesty. But the MACD is looking great, right? The MACD is looking very healthy, looking, I wouldn't say overwhelmingly bullish, but pretty damn good. Honestly, pretty darn good, right? Definitely nothing to shy at whatsoever. So that's a good sign to see if you're a bull, of course. Now the Bollinger Band's rather still pretty wide, not really showing anything too squeeze worthy of here, which is probably why that squeeze indicator I showed you earlier didn't really show anything of importance in terms of potential squeeze coming up, which usually indicates a large move on its way, right? But, again, until the Bollinger Bands get tighter and tighter and tighter, which essentially would only happen if we just continue consolidating around this price range and just keep zigzagging between the 250s and the 240s for honestly at least another week, if not a few weeks. I don't think they'll get anything too crazy here, so I don't think it's anything worth really paying attention to overall as well. But that is essentially what I'll be personally looking at. Those are the main things I am eyeballing as of right now. Ladies and gentlemen, let's go ahead and open this up really quickly. Actually, I do want to see something here very quickly, which is going to be the short volume, right? What's the short interest on Tesla right now? The short interest on Tesla, as you can see, nothing too crazy. It's pretty much going sideways. So not many people are really shorting Tesla, at least nothing abnormal from what we've seen recently. So nothing completely crazy. So we're kind of chilling with a short interest right now. Nothing too crazy. So it's fairly irrelevant. I want to double check that just to make sure we're not missing out on anything. So all in all, that's essentially what I am seeing. But I do want to make it clear, right? If you go over to the daily on SPY, which of course affects Tesla, you can see it is bouncing off the median line over here on this overall ascending channel that we have been in on SPY for quite some time now. Right, it is kind of bouncing off that median, but it is getting a pretty substantial potential bearish divergence. As you can see, it is kind of following at the moment, but it's so much significantly lower, the RSI, from these 2 points compared to the stock, or I mean SPY, that it's a little concerning. I'm not gonna lie. Same with QQQ, right? Substantially lower than these levels were back here, even though we're not that far off from the actual level in terms of the price. The RSI is like substantially lower, which again, it's a lot slower and a much more of a laggy indicator. So it's not going to play out tomorrow, right? This is one of those things that might take a couple of weeks to play out really, but it does smell like a bit of a bull trap. And I do think Tesla, even if we go up to about, let's say $270 per share, I do think it'll be a bull trap ultimately. I do think we'll get rejected from there. And I do think that we will get a pretty sideways to slightly bearish rest of September and potentially even October as well. So I'm not overwhelmingly bullish. I am slightly short-term bullish, but I'm not overwhelmingly bullish. And especially in the slightly longer-ish time frame for like, the next 2 months or something like that, I definitely think that, things will be a little bit rocky. I don't think we're out of the, the turbulence area just yet, in my opinion. But that's just kind of what I am seeing, and that's what I am thinking. So let me know what you think down below. Ladies and gentlemen, if you enjoyed, don't forget to hit that like button. As usual, if you would like to use TrendSpider yourself to get all these amazing indicators, amazing options and whatnot, and just things to use to chart with and whatnot, the link is down below. You can definitely check it out for yourself and try using it as well. But either way, thank you so much for watching. I'll see you tomorrow. Peace.